A very warm welcome to our 11th policy talk, EuroCommerce policy talks, where we engage with our friends and allies and in Brussels, but also with a key policymaker. And today we're very pleased to welcome Commissioner Mairead McGuinness, who is a Commissioner for Financial Stability and Capital Markets Union. Commissioner, Mairead, warm welcome. I call you Mairead because we've had some dealings with you when you were Vice Chair of the European Parliament, dealing very effectively and passionately about issues around agriculture, and we are pleased to see you again in this new incarnation as Commissioner in dealing with a number of financial services issues. We're going to talk today about issues around investors' protection, around green finance and taxonomy, and also around payments issues. So these are all issues that are very important for us as retailers. We're dealing with many different issues, and those are issues that are within your portfolio and responsibility. So we will hear from you, from your detailed remarks for an important part of this policy talk, and after that we'll have Neil Macmillan, my colleague, coming in with questions we have received from the audience. And for people who have been invited and have registered to this policy talk. So, Commissioner, over to you.
Well, thank you very much, and a very good evening, Christian, and to all who are engaged in this conversation. As you said, I'm going to set out some key issues that impact your sector, but equally I look forward to hearing the issues that you want to raise in the question and answer session. And yes, Christian, we had a very good engagement in a previous incarnation, and I think it's good that we have an opportunity to talk about how the area that I'm responsible for, which is the financial system, how that links to the work of EuroCommerce, and they are inseparable. And I think one of the things and one of the areas that we perhaps take for granted within the European Union is the single market. Brexit, in my view, really has shown us the importance of the single market and indeed what happens when there is fragmentation. And of course, the single market, which your members benefit from in terms of access to such a wide range of consumers across so many countries, didn't happen by accident at all. It came about because of persistent policy initiatives and with care and attention. But it is an important part of the European Union. It remains to be completed. We still have work to do. And maybe today I could talk to you about how the single market in financial services with regards to payments and capital can be developed so that business can benefit fully from access to this 27 countries and the markets that they have. Safe to say that we've all been through a very difficult time over a year and a half with the COVID-19 pandemic. Global, but impacts local, and impacted very differently, both within countries and within and across sectors. And I think it highlights for me that the natural world can have a devastating impact on our economic world, and that we can no longer continue to separate those two. We need a more holistic approach to the future. So we need an approach to our economy and society that looks towards sustainability. And I know that is an issue we will talk about in terms of finance and how we get on this path towards sustainability. But we're not out of this crisis yet. Europe, as you know, has a very strong commitment with Next Generation EU. Governments have been supporting employees and businesses, as has the ECB. So in one sense, we have been cushioned from perhaps the worst impacts. And I think as we move into the recovery phase, we're always mindful of making sure that the supports remain in place for as long as they're needed. And we will, I'm sure, have to have a conversation about the longer term in relation to government and ECB actions. For now, in my role, we've been very conscious that the banks have continued to lend to the wider economy, both consumers and businesses. We would have some concerns around an increase in non-performing loans, and we addressed that in December, really to try and make sure that banks and borrowers talk to each other early and engage, and maybe avoid some build-up that could be dealt with some restructuring within the existing framework. So early attention was important, and we did that last December, and we will be mindful and watchful of what evolves over the coming weeks and months. When we look to this Capital Markets Union, and it is an area that I'm mandated to make improvements on and to develop further, everyone is committed to a strong European Capital Markets Union. At the moment, we have a fragmented capital markets nationalised in member states, but we know that if we could harness a capital markets union that is European, it would certainly help our businesses and those that need equity investment, and not to have them relying too much on bank finance. So that's an area that I'm continuing to work in, and I'm sure that you have some views around it. We have our action plan, which is set out there for the future of the capital markets. And we equally have very strong commitments about the future orientation of the recovery. It was there anyway in terms of the leaders wanting us to be very ambitious, so climate neutrality by 2050. The European Green Deal is the growth strategy to achieve those targets. But of course, a lot of work has to happen underneath those themes in order for us to achieve these ambitions, and to do it in a way which doesn't lead to severe impacts, both on groups that might be disadvantaged or on sectors that might be particularly hard hit. So this is about, if you like, transforming our economy and society towards a more sustainable future while leaving no one behind. And it is a huge ambition, and I think we all have to work together to achieve it. Part of that effort will be to make sure we have money flowing towards sustainable activities. So we have to work with the financial system, give them the information they need, those who are investing and want to invest in a sustainable future, that they get the information from the corporate world about what the companies are doing around sustainability. So it's really matching ambitions around investments with information and allowing this private capital flow towards sustainability. And underpinning this work is the EU taxonomy. And I'm sure you are familiar with this. Basically, it is a classification system identifying economic activities that are sustainable or green. And it does it in a very granular way. So at the moment, there is a draft delegated act for consideration by the co-legislators, Parliament and Council, dealing with a whole range of economic activities, from forestry to aluminium production to construction, insurance. So a whole range, and very diverse, but pointing to where you could identify these as being sustainable for the future. For me, the taxonomy is both a signpost, so it's a destination, and a signpost for those who are moving towards sustainability. But the truth is, if we only invest in what's green today, we won't make the big transition. And we will be coming forward next week with some more detail on our renewed sustainable finance strategy, looking at this transitional issue and how we will deal with that. So the taxonomy is a key part of our work. Equally is around disclosures. So we have the Sustainable Finance Disclosure Regulation, which is for the financial world. We've just proposed the Corporate Sustainability Reporting Directive, and that's, if you like, the next iteration of the non-financial reporting directive. And as I see it, we will come to a time in future where accounting, if you like, or the financial information of companies and the sustainability information will be on a par. So both will be important. And indeed, one of the issues that we may need to look at is whether current accounting rules and regulations fit with this more holistic approach to sustainability and what we expect of economic activities and companies within, not just in Europe, but globally as well. So I think around these issues, there's big change coming, and what we need to do is explain why we're going in this direction and explain the role that all of the measures I've just referenced have to play in making sure that we address sustainability and that we achieve the targets that we've set for ourselves. I know investor protection is a very big issue, and we may indeed come back to it in question time. So I want to deal with it now. I know you're very aware that the member states are finalising the termination of these intra-EU bilateral investment treaties, BITs for short, and their formal termination allows us to turn the page, if you like, and to look to the future as to what we might put in place. So as I do that, I want to look ahead and how we can discuss protection and also make sure that we don't discourage cross-border investment under our framework. So give some guarantees and, if you like, support to those who want to invest across border but have some concerns around it. Clearly, the aim is to ensure that investors can invest across EU countries, and they do so with confidence that there are rules there to protect their investments and that those rules will be enforced. So we want to strengthen investment protection and the facilitation framework that we have, and it is a key part of last September's CMU action plan. And I'm very appreciative that EuroCommerce supports this work, and I want to thank you for contributing and continuing to support this, including your involvement in workshops and various contributions to public consultations and the external study, because all of this gives us very valuable insights and gives us a lot of detail so that we can work on a very positive initiative. So let me try and update you on the state of play as to where the internal process is ongoing, but I can give you some pointers. We expect the timing of our initiative to shift to late autumn because we just need more time to reflect. I would emphasize today that we have made no final decisions, but I think it's important, because you are so engaged in this area, that I give you some indication of our current thinking. So when we're designing the proposal, we're taking into account not just the perspective of investors, but that is also important, but other concerns, including the concerns of civil society around the potential initiative. So here we're paying very close attention to the need to respect the right of member states to regulate in the public interest. And I think you will understand that. We're looking at trying to strike a compromise, a good compromise, in accommodating different and maybe conflicting interests and providing reassurances to stakeholders, from civil society to individual investors, to SMEs and indeed larger companies. So let me look at what the external study, which accompanies our impact assessment, and indeed that will all be published very soon. The study identifies two main problems that lead to higher costs and that may discourage cross-border investment flows in Europe. First, it suggests there is a problem relating to the rules. Stakeholders report that the current rules don't provide enough protection, and investors lack confidence in those rules. It recommends addressing this by increasing the visibility of the rules and making comprehensive improvements. Secondly, the study finds there is an enforcement problem. So there are difficulties in enforcing investment protection rules, and investors find it hard to get effective remedies for cross-border investment disputes and problems. Here, the study's recommendation is to streamline procedural rules and set up a European investment board to examine individual cases in this area of investment protection, complementing national enforcement systems. Now, based on the input from the study and taking into consideration the other contributions we've received, we've looked at options that could deliver concrete results and do it relatively quickly. So the first is the single digital gateway. This could help address the first problem identified by the study, because at the moment rules are spread across different national laws and indeed in EU law, and the gateway would centralize information on investment protection rules, allowing for easy reference and comparison. If we look to enforcement, one remedy that we are investigating is potentially expanding the role of Solvit. And as you know, today, Solvit provides help to citizens and businesses when a public authority in another EU country is not doing what it is required to do under EU law. Now, I understand from our public consultation that it has been of limited relevance for cases on investment protection. So the idea, therefore, would be to set up an upgraded, if you like, Solvit. So we'll call it Solvit Invest, and this would be adapted to investment cases. Now, here, investors of all sizes could benefit from this tailored channel in two ways. So firstly, it would aim to resolve individual cases amicably and prevent escalation into a dispute. And I think prevention is always better sometimes than cure. The intention here is to set up a Solvit branch that specializes in investment cases, equipped with specific independent safeguards. Secondly, this would allow the reporting of issues of general concern, such as recurring investment protection issues. And in that case, contact points would be set up within Solvit Invest, where stakeholders could provide structured feedback. And this feedback would provide a better overview of structural issues at the national and at the EU level. Now, our main idea on enforcement is to set up a European mechanism to help settle disputes between investors and host member states. What exact form and structure it will take is still being explored, but I can share with you some of the general outline. The mechanism would deal with individual cases at an EU level, and the idea would be for it to carry out two types of tasks. One would be to carry out voluntary mediation, but it would go beyond mediation, as indeed EuroCommerce has suggested is necessary. Second, it would give an independent legal opinion on alleged violations of EU law in a particular case, including recommendations on an appropriate remedies. Now, I want to be clear that this is a novel idea and it doesn't exist at present. It goes beyond the current status quo, and this is not an area that infringements tackle. National courts would not be bound by this legal opinion, but it could be taken into account in national proceedings as specialised independent input about how EU investment protection rules apply in specific cases. And this would allow investors to bring the EU level into dispute settlement. This would be new. It would be a pragmatic solution that responds to investors' calls for a dispute settlement mechanism at the EU level, complementing and adding value to the current EU legal framework. It should be feasible to implement relatively quickly within our budgetary constraints, and it would be open to investors of all sizes, including SMEs. And this option would also give us data about the cases being examined and the difficulties faced by investors. And that information could be combined with the data from the upgraded Solvit Invest, giving the Commission broad evidence about how EU investment protection rules work in practice. And that could help us identify possible recurring issues in the single market. We plan to set up an investment forum involving the Commission, Member States, investors and civil society. And this forum would allow regular discussions on how our approach to investment protection could continue to be improved. The intention is to bring transparency to the problems that investors face, to allow for informed exchanges in a coordinated way, and to contribute to a more positive investment environment within the European Union. Through strong enforcement, we would also address the issue of investor confidence in the rules and see what further improvements might be needed. And we will continue to carefully consider all the evidence received, including ideas we've received from EuroCommerce. For me, finding the right solution is really important, and I hope we will see, rather than you will see, that what I have outlined here in broad sketch is an important step, though it may not meet rather your full expectations. And again, we could discuss that in the questions and answers session. From my side, what we have to do is balance the perspectives of all stakeholders, and that is crucial. And we want to make our proposal as workable and as credible as we can. And there are a number of factors that I think we are considering, and I list some of them: legal complexity, subsidiarity, proportionality, budget constraints, and political feasibility. And we're carefully considering all options other than I proposed by different stakeholders. But our analysis at the moment would suggest that some of them would be extremely difficult to implement. But we believe we have found credible alternatives. Now, I will be very clear that I understand EuroCommerce favours an investment court modelled on the patent court. But our analysis would suggest that there are major legal, political and budgetary challenges that would make this option extremely difficult to implement in practice. And we also know that civil society organisations have concerns about such a court. So I look forward to your views, and I trust that we will continue this constructive dialogue. And I hope to be able to count on your support as our initiative reaches the next stage. And perhaps again in the questions and answers, we can discuss this in more detail. Let me move to payments briefly. And the payments are obviously another really important issue for retailers and wholesalers. Again, the single market is not fully developed and we have too much national fragmentation. We want to help businesses across the single market, which is why we published a retail payment strategy last autumn. And a big part of that strategy focuses on instant payments, where we see money changing hands at the click of a mouse or a swipe on a phone. And for merchants, instant payments means there's no longer a need for a payment guarantee because money arrives in an account without delay. And these instant payments should lead to lower costs for merchants through increased choice and competition. And just a few weeks ago, my services organised a webinar where the many benefits of instant payments for merchants were outlined, and indeed not least by yourselves, EuroCommerce. But I think it's fair to say we haven't yet unlocked the full potential here. Instant credit transfers represent less than 8%. That's 8% of all credit transfers in euros. So it is an opportunity lost and we need to work on it. Our public consultation on instant payments closed last week and we are starting to review the contributions, including those we received from yourselves. And the results will feed into our assessment of the state of play on instant payments. And of course, we will decide after the summer whether or indeed how the Commission needs to accelerate the uptake of instant payments. Equally, in our strategy, we announced a review of the Payment Services Directive. And this has been a game changer for payment services in the EU, in particular by providing an open banking framework. But again, the potential of the directive for merchants hasn't been fully exploited. We are really interested in market initiatives that offer more payment solutions in shops, for example, instant credit transfers on the basis of the directive, and this could be attractive for merchants and customers. The review will look at the evidence of how well the directive works and indeed whether it needs to be revised. This process will take time, but I want to assure you that your voice will be heard. One part, and it's a key part of the Payment Services Directive, of course, is strong customer authentication, or SCA. Now, I know that this is a sensitive issue and there are some conflicting views. But SCA introduced new procedures and some have concerns that this has led to a negative impact on conversion rates, maybe leading to consumers abandoning transactions. But I really need to stress and highlight that SCA is an essential tool against fraud, which is a huge issue for online payments. And I think we all agree that we need to tackle fraud. And I want to quote some latest figures from the ECB, where e-commerce fraud in the European Union increased more than sixfold from 2014 to 2018. And it constitutes almost 80% of total payment card fraud and accounted for 1.43 billion euros in fraud losses in 2018. And this issue of fraud has become much more significant during the pandemic, which has resulted in a significant increase in demand and use of electronic payment services. And in a very recent report, Europol warned that cyber criminals have been extremely active during the COVID crisis and using all sorts of techniques, malware attacks, etc., to extract payment card information and extort victims. And we've many stories. I don't think there's anyone who hasn't been impacted in some way on this issue. But here there may be some good news on the horizon in this fight against online fraud. And this is thanks to SCA. So again, just a few days ago, the EBA published a report on industry and SCA based on data they've collected from payment service providers. And according to this report, fraud rates decreased from June last year to April of this year by 50% for issuing payment services providers and by 40% for acquiring ones. Now, I'm aware that your concerns about a lack of information about the performance of SCA and the impact on costs and fraud levels. So I hope that this EBA report will address some of your concerns. And I think the information it provides is very significant. And there were some initial difficulties with the introduction of SCA. And I think that was almost inevitable, linked perhaps to the scale of the work, the preparatory work that was needed. But I do think now we are on track to finally complete the migration to SCA. And indeed, in the same EBA report I've just referenced, it notes that 99% of all e-merchants in the EU were reported to be able to support SCAs as of April this year. So I'm really grateful for all the efforts that merchants have made, because I know it has not been easy. And EuroCommerce has really helped both in increasing awareness and supporting merchants to become fully SCA compliant. So very much appreciated from our side. There is an issue that I know you are particularly concerned about, and that's scheme fees. and you believe that new fees directly linked to SCAs have been announced by major card schemes. And here your concerns regarding scheme fees are known to the Commission, and DG Competition Services are currently looking into these fees in the context of monitoring the interchange fee regulation. So in conclusion, as we look to the economic recovery, we need to create the conditions where business can thrive. And that means we need to make sure that we reap the full benefits of the single market, including the free movement of capital and for payments. I want to thank you for the invitation. I have perhaps gone through quite a lot of detail in my opening remarks to you, but I now look forward to the discussion and your questions. So back to you, and thank you.
Thank you very much, Commissioner, for a very detailed, and I'm sure we've taken quite copious notes on, certainly on investor protection was very helpful, and also on SCA. I think it's important. We do recognize the importance of fraud and as that as a very important area. And on scheme fees, I'm glad that we that you are aware and that the Commission is undertaking action on that, because we were, I have to say, slightly disappointed by initial inaction, and despite the fact that we've raised it with the service on a number of issues, that in fact all the gains for retailers, but more importantly for consumers, were that we had with the interchange fee regulation was after a few years basically come down to actually fees that are because of the circumvention by that, and we see also some further, I mean, not later than the last few days, I think, and we've written to the Commission on mergers and further acquisitions in the payments market will lead to a further deterioration of what we see as a duopoly there. So perhaps, Neil, you want to mention that. I think we have about 15 minutes, I think, left for questions. You haven't talked about green finance. I don't know if we want to start with some of the questions around that, Neil, or maybe you had something else being teed up.
Yeah, we can if the Commissioner's happy to start with that. As you say, we've only got 15 minutes, so I don't want to lose some of the other questions we've got. But I think on taxonomy, and on green finance more generally, we wanted to hear a little bit, and this is a question we had from some of our audience. As a sector here, we have rather indirect control over the areas covered by the taxonomy compass. We just wanted to hear perhaps how you saw retail fitting into this general matrix of the various green finance initiatives, and how we can essentially benefit from that in what are quite considerable investments we're already making in sustainable practices.
Well, first of all, I think you've answered part of the question, that you're already making investments in sustainable practices, because if I didn't make the point, I'll make it now. I think when we are looking at these very ambitious climate targets and environmental targets, because we're only at the beginning of this process. First, we've dealt with climate, but remember, water, biodiversity and other issues will come into play, that every single sector of our society and economy need to make adjustments. Specifically on the taxonomy, which has not been an easy process in terms of our first iteration of the range of activities addressing climate adaptation and mitigation. This is designed, if you like, to classify what is essentially sustainable and what is green. And the truth is, today, a very small percentage of what we do economically is sustainable. But that doesn't mean that without investments and some reorientation, that it cannot become sustainable. So many sectors will see the taxonomy, I hope, as a management tool to give them the direction of travel and allow companies, both in the sectors that you represent, to plan for and be able to claim that they meet these sustainability criteria. And while it is perhaps in an indirect way, I think that is how this will function. A few points around the taxonomy itself. It is a living document, because there will be changes in technology and in standards, and that will have to be reflected in the taxonomy document itself. Secondly, it is a global first, so Europe is leading the way. And thirdly, it's a huge challenge as well as an opportunity. As a member of Parliament, I voted for the taxonomy regulation in 2019. I had no idea that it would become, if you like, put to my shoulders to carry it through to actually implementation. But what the taxonomy does is allow companies, and I said this, use it as a management tool, allow them show investment plans so that they can go to the market, point out to what they're doing, and gain the benefits of sustainable finance at a better rate than those companies that will not be engaging in sustainable practices. It also allows those companies, the pension funds, the investors, large and small, who want to invest in the long term and in a sustainable way. It gives them the information which should be credible and comparable to allow them be sure of where their investments are being made and that it meets their sustainability requirements. So it's quite a complex matrix, but if you stand back from it, it makes sense that information is the key and making the right choices around sustainability is the key. When it comes to the retail sector, let me make a comparison that I've often used, maybe in the member state I know best, which was most likely impacted by Brexit, but across the 27 member states. When Brexit happened, there was advice given to companies that they should forensically examine their supply chains end to end and look for where there might be Brexit vulnerabilities and maybe change suppliers or move and be less reliant on certain suppliers. And in a sense, I think when we're looking at sustainability, the same forensic examination of supply chains is required, end to end, around sustainability, around questioning each, if you like, link in the chain, in order to make sure that everything that happens within a supply chain is in the direction of sustainability. And I think that the companies and that EuroCommerce represents are part of that. And equally around buildings, we look at energy efficiency, installing, whether it's solar panels, all of these things that add towards a more sustainable future. So again, it's about companies sitting down, whether you're large or small, and deciding if you want to be in the business in the medium to long term, that what you do today will not, if you like, guarantee you a future, and that you need to start planning for more sustainable future. Now, I know there are some concerns with SMEs about what they may be asked to do, but again, I would make the point that an SME that's part of a supply chain that is going towards sustainability will equally want to be part of that movement and to address sustainability criteria. What I hope doesn't happen, but I think maybe it is already part of the conversation, is that people become fearful of what the taxonomy means and how it will be used. It's understandable that SMEs and indeed large companies that have been hit by this pandemic and the shutdown of their activities, are concerned about having to recover and be sustainable. But in a sense, what I would suggest, and the same goes for member states, is we can't just go back to the way we were, because that's not a solution. We have to use the opportunity of what is available in terms of public finance, but equally private money to address sustainability issues and to really focus and invest in a future that will keep us in this pathway, rather than us investing in the status quo and wasting essentially a crisis which has been extremely deep, both at a societal level and at the economic level. So I hope I've answered how you fit into that, but please come back to me with further questions.
I'm conscious of time, so I will perhaps actually just make one comment just rather than a question for you, which is, as you know, 99% of our companies, and indeed most companies, are SMEs. And I think there are two concerns that we have, which is one, that there is a 3-year delay on the CSRD, but what happens after 3 years, it's still going to be fairly complex and fairly expensive. Mm-hmm. And the other concern we have, and I won't ask you to comment on that, but just really to make a point, which is that there is this so-called trickle-down risk, which is where larger companies in the supply chain essentially dump the obligations on smaller companies who are less able to cope with them. But I know you're aware of those things, and I won't press you further on that. Could I turn to investor protection very quickly? And I think that on that, I'll perhaps try and put three short questions together because I think they're fairly clearly linked. First of all, I think our concern is that we want to have something which is as effective as the bits that they're meant to be replacing. And something which a number of our members have said is that they are worried that in a way EU investors will get a worse deal than third country investors because they will be protected in a different way. I think the second point is that, and this is, I think, perhaps part of the solution which you have already pointed to, is that we face already in a number of countries national courts who are unable or unwilling to hear cases by people who are actually being mistreated by the national authorities. And I don't need to go into where that's happening particularly. So what we're looking for really is something which is as legally binding as possible. And I just wondered whether there are any ways in your mind that we can make it slightly tougher. For example, in the recommendations that come forward from the board that you're thinking about, is that something which could be linked into infringement where there is a clear infringement of EU rules going forward, if you like, as part of the process? Because I think we are worried that otherwise Solvit, which has been rather underfunded, is not really going to necessarily have the teeth that it needs to be. But maybe you could give some thoughts on that.
Well, first of all, I take on that as a comment and appreciate what you're saying about you still have some concerns. Look, we are not going to replace bits with bits, so we have to be very clear that the termination has to happen, but we have to make sure that we have a framework in place where we use existing legislation, both EU and national, to protect investors. And maybe the concern is perhaps that, and I've tried to outline where we see we can strengthen some of the existing framework without calling it a new legal entity. We're still working through this process. It is quite complicated, and that's why I hear what you're saying around the ongoing concerns as to what might be coming in place and whether it will be sufficient to give this guarantee towards investors. I mean, I don't agree that third country investors have a higher level of protection than EU investors, and that shouldn't be the case. I think there should be a protection for investors. And as I said, using the framework that we have. I won't comment a yes or no as to the proposal you have just made around, could we do a little bit more? But let me just let that settle and bring it into part of the conversations we're having here. But just rest assured, we have spent a great deal of time on this issue, not just making sure that we have the terminations, but equally looking to what we can do, given those constraints that I listed in my speech, to give more, if you like, certainty to investors that they have some guarantees and some protections around investments. And perhaps it is a case of trying to use all of the available legislation that currently exists. And equally, if we do get this Solvit mechanism working to the standard we would like it to around investors, it gives us quality information that we can deal with. So I'm not able to give you all the certainties that your question requires, but I do want to give you assurances that we have spent a lot of time around this issue and trying to give as much certainty to investors, because it is in our interest to make sure that investments happen across border. It is not good if there is a fear amongst investors of investing across border, but equally we need to know where the problems are and we can address those. If I may briefly say around your comments around the trickle down and SMEs being dumped on, it's not enough for a big company to lean on a smaller company to do its work for it. So the big company will be tested as perhaps might the SME. And secondly, we will be mindful of that. When you ask about the 3-year rule, I think 3 years is a good amount of time for SMEs to adjust, but also to think about this not as an impediment or an imposition, but rather as a strategy for their future. Because I think many SMEs, while they're struggling with recovery, equally know that they're part of this movement towards sustainability. And companies large and small know what they need to do, but I understand the concerns they have, particularly when we're coming out of a crisis. But I think you would agree that it would be pointless for us to say, well, we'll postpone all of the Green Deal objectives and targets, and we'll recover to the way we were, and then we'll start up. That would just be a waste of money. And, one of the figures that is certainly quite, it keeps me awake at night, is that we will need investment of 350 billion annually. Every year, that's annually to achieve our 2030 target in terms of emissions reductions. So this is a lot of investment needed from the private sector. We equally know that pension funds and large investors want to be part of this future iteration around sustainability, and that they're looking for this. Equally, we have to do things around the insurance sector to allow them invest long term. So I think the whole package of measures which will eventually come into place, when they weave together, they will have a framework where it allows sustainability to be embedded rather than an add-on. And I think my last comment would be that I think up to now, and maybe in the recent past, ESG issues, so all these environmental stuff, were included in many financial reports as almost a nice picture, something nice to say. But actually what we're saying very clearly now is they're not just nice to say, they're really important that you do these things. And they're as important as your financial health. Because if you don't have a healthy future around sustainability, then your financial health will suffer. And I think we saw that with COVID-19, that companies may not have thought that a public health crisis would impact their bottom line, but it did. And it continues to do. So I think we've had a bit of a mindset shift, I hope, to see that what happens in the natural world impacts the financial world. And that, from my side, there are huge financial instability risks if we don't tackle all of these issues and do it in a holistic way.
Well, thank you very much.
Whether we have time for one more question for the Commission?
You do?
Okay, maybe we could just touch on payments very quickly, because that is, first of all, thank you very much indeed for all of your comments on all of those points. I think those have been very, very helpful. I think on payments, if I can just point to 2 points and ask whether you've got any further thoughts on those. The first of them is, as you rightly say, we have a situation at the moment where competition in the payments market is quite limited. We have two very, very large international players who are, I'm afraid, still piling on fees. As Christian said in his introduction, essentially they have already, through those fees, cancelled out all of the benefit of the interchange fee regulation. And we're actually paying more than we did before the regulation came into force. The second point is on the SCA. You quite rightly pointed to fraud and the increase in fraud over years. What our concern is, and I just wonder whether there is something you might be able to say on this, Commissioner, we are getting figures from our members and some of the consultants who are looking at this that suggests that the annual fraud amount is actually being lost every month in cancelled payments as a result of not us being unready for it, but actually the banks who assured everybody that they were ready, not in fact enabling their consumer cards to use SCA, and therefore the transactions not going through. And anything that the Commission can do to persuade the EBA to look at that site more seriously would be very, very helpful.
Well, look, again, I'm going to take questions as both comments and indeed try and address the questions, because it's important we hear what you're hearing on the ground around banks not being prepared. One of the issues that I faced with some alarm at the beginning of this year was this very issue of SCA, that it was coming in and that we were hearing people were not prepared, the financial system and merchants. And it has really, I suppose, been, from my side, good to see that the worst that were being predicted didn't happen. However, I do take on board what you were saying around potential loss of transactions, and that's something that we perhaps need to hear more detail on. And at service level, I'm very happy for you to transmit those concerns. But it seems to me what we're talking about is not that SCA is a good or bad idea, because I think it's a good idea. I think we have to tackle fraud, but we do not want it in this transition when it becomes fully implemented, and where hopefully all merchants and banks are up to speed and systems are in place. We want it that it tackles fraud and avoids transaction losses. And again, the information in the EBA report, in my view, is helpful around this. But we will look at this again, and maybe at service level we can have a discussion around it. I mean, as an individual citizen, I've dealt with SCA. It's extraordinary how these things that are bureaucratic become personal. And I have to say, I haven't had problems with it. I do accept what you're saying, that the experience of some is that transactions have been lost. But this would not be a permanent issue. If some banks were not ready, they should be ready by now. And if they're not ready, we need to know, and we need to deal with that as a very serious issue, because we're now moving into the second half of this year, and we've had time. People have had time to adjust, even if it's been difficult through a crisis. So the information you have from practitioners, really would appreciate that you feed that into our system, and we can then come back to you with some responses. But I hope you would understand, and I think you do, that tackling fraud is hugely important. We'll soon be coming forward with very significant changes to anti-money laundering rules as well. And when I see the amount of money that is, criminals have access to, and how they can so easily defraud the citizens, anything we do to tighten the system is to the better. But we have to do it with the industry. And maybe because we had COVID as well, some parts of the industry were not prepared. Perhaps others didn't prepare because they didn't think it was important. But it's certainly my intention that the industry in all parts would be very well prepared, and that implements fully SCA for the benefit of citizens and the system itself, because fraud is bad for everybody. But equally, I take the point that lost transactions are a loss to the sector, but I would have hoped that they might be a temporary issue, not a permanent one.
Thank you very much.
Thank you very much, and I think time is up. Please do take on board the comments in Neil's first questions on the importance of interchange via regulation. I think which for us was a very important issue, and we put a lot of faith also in this European initiative that is under development, the EPI. I mean, there's a few things that need to be fixed around it in terms of governance, so that it becomes also open to payments users, which I think retailers is one of the most important sectors there. But I think this hopefully will set up some competition also in the payments market, and I think we need to all remain vigilant also when we looked at revision of competition rules, which your colleague Executive Vice President Vestager is looking at with you, because this is something that is indeed very important. Now, thank you very much for having indulged in a few additional minutes to address very precisely the questions and comments that have been put to us. We could have gone on for another hour. I appreciate your commitment, engagement with us, Commissioner. I hope that this can be the beginning, or not the beginning, the continuation of a regular interaction that we have with your cabinet and with the services in DG FISMA. I think that is very important. Hopefully you can give that signal as you have also in your remarks on the importance of the various contributions that EuroCommerce has provided on a number of those issues. And I think it is important that continues and a sort of openness and constructive dialogue with the services is indeed maintained. So for today, thank you very much for having participated, and to all our viewers, thank you very much for participating. That our next policy talk is already in 2 days' time with Christel Schaldemose, who's the rapporteur on the Digital Services Act. We have a lot of people interested into that, so tune in again on July 1st for this webinar. And for today, again, thank you very much. Thank you, Neil, for your help, and dear Commissioner, dear Mairead, thank you very much for your participation.
Thank you very much, Commissioner. Bye-bye. It's great to see you again.
Bye-bye.
Good to see you all. Take care. Have a nice evening.
Bye-bye. Bye-bye.
Bye-bye.